Do you do anything with like the 2-to-1 buy down program, stuff like that?
Yeah.
The
Yeah.
idea I had with two to one buy downs, though, the reason why I'm asking about 2-to-1 buy downs is because I think it's a great opportunity still for some people out here in today's market with the way that things are heading. And it's spring, the market's starting to pick back up. There are some people that are still motivated in buying a home, and they're just kind of at a level where it might not make perfect sense for them. But I think you and I both know that no matter what, it's always a great time to buy as long as you're going to be able to afford it moving forward. So
Yeah. So the 2-1 buy down has benefits to the seller and it has benefits to the buyer. And the benefits to the seller, if you're a listing agent, are that in the first path of least resistance of a house has been sitting on the market is that you guys drop the price. And I've always tried to encourage the listing agents to tackle or to undertake potentially doing using a 2-1 buy down as an offer to potential buyers. And the benefits of that is, let's just take an average house at 250. If the asking price is 250 and you're not able to move it, traditionally realtors will then lower the price 10,000 bucks or something, some
true,
lower level. And if
true.
you actually use a 2-1 buy down as part of your marketing, you could actually increase the price and have it sold at $260,000 and then have the seller give back the $10,000 as a credit to help the buyer do the 2-1 buy down.
Okay.
And that is very helpful because you, as the listing agent, still get a higher commission. You still get the seller still gets what they wanted the price of the house to be sold at, but the buyer now gets the benefits of 2 years of lower interest rates and lower payments. And the essentially what's happening here is that it's made up money that is being used to buy down that rate and to get those 2 years of lower interest rates. So that's the benefit to the seller. The benefit to the buyer,
Okay.
I touched on a little bit, but the benefit of the buyer is, of course, is they do well, another benefit for the seller is that they're going to attract potentially more buyers that would be interested in that property because they need lower monthly payments. They wanted to have, they've just started a new job and they're maybe not making as much as they will be in 2 years, but it will give them some time to build up some additional increases in their amount that they're being paid or increases in their salary. So that is a huge tool that should be used more, but most people are unaware of it or afraid of it.
Sure. So this 2-to-1, break that down a little bit though. What does the two stand for and what does the one stand for?
Yeah. So there are three favorite flavors of buy downs. There's a 3-2-1 buy down, there's a 2-1 buy down, and there's a 1-1 buy down. And then there also, I guess, is a fourth. There's a 1-0 buy down. And essentially what that means is for the let's just talk about the 2-1 buy down. Essentially what that means is you get as a buyer get pre-approved at let's say a 6.5 rate. So that's your approval rate. But if you use the 2-1 buy down, the first year or the first 2 years, you actually have a rate of 4.5 if you were reapproved at 6.5. So whatever it is. And then the next year you would move to 5.5. And then the third year you would bump back up to that 6.5. So it gives you a little bit of time between maybe rates will go down and then you can refinance at that lower rate, but it gives you lower payments with a lower interest rate for that first 2 years.
And let's just say that we're at 6.5 and we do the 2-1 buy down as a buyer and my rate goes down to 4.5. Is it factual then that I am still locked in to go back to the 6.5, or by the time we get there in 2 years, could that have already changed, or is we're
Well,
factually there
you
at
you
6.5?
are yeah, you are approved at 6.5, but the idea is to refinance if the rates drop below
Right.
6.5 in between that time. And here's the other beautiful thing for buyers is the um the monies that are being put into the escrow at the closing, perhaps you want to refinance in that first 12 months and there's money in the escrow, or even in the first
Mhm.
18 months, there's money in the escrow. And when you refinance, you don't lose that money in the escrow. You can roll that back in to the next loan. So,
Nice. Okay.
yeah, so that's a little bit of a benefit as well.
Statistically, have you used a 2-1 buy down at all in 2024 for anybody?
I did. I actually just did one. What it was a jumbo loan, which is an amazing loan. So I had a client that just did $1 million loan, and well, sorry, they bought a house at $1.1 million, and the loan was, I think, $980,000. We got $23,000 in seller concessions to buy down the rate. They were approved, I think it was 6.5, and ended up going down to 4.5. So they lowered their payment by like a couple $100 each
Hmm.
month and went on a jumbo loan of all things. My God,
Wow.
4.5% on a jumbo loan, which was $1 million
So,
loan.
okay. So tell me a little bit more about the jumbo loan. Like how does that operate? What does that look like?
Well, a jumbo loan essentially is just based on the amount of uh, approved uh, approved pricing for each county in the state of United States has a different conforming rates, and then anything above that is what's called the jumbo. And so
Got it.
typically that, right, I think 2025, I think that number is about 875,000. So any loan that's higher than that is then categorized as a jumbo loan.
Got it. Well said. Actually, clear picture. Actually sounds like something that people should probably consider moving forward with more. I
So
mean,
it goes hand in hand with what we call seller concessions. So seller
yeah,
concessions is essentially could be also a 2-1 buy down. So seller concessions, depending on that house, if you and you and I did a deal where we did 3% seller concessions.
yeah,
And so you can take that 3% seller concessions and use that money as the way to do the 2-1 buy down or the 1-0 buy
sure.
down.
So any
So that's how that.
concessions given from the seller, the buyers can choose to say, "Hey, Mark, you're my lender. I would like you to take this credit and buy down my rate, and
Correct.
let us have a more affordable monthly payment."
Correct. And
Okay,
so the lender should be if you see seller concessions, most traditional times it's to repair something, but it could also be used to buy down the rate and do that 2-1 buy down. So
sure.
that's
So
that's
there's
something that.
multiple ways they can use it, right? So if you have like a concession of $20,000, let's say, somebody could take 10 and put it towards their buy down and 10 towards repairs or however they want to break it down.
Yep. So the way seller concessions work in a percentage way is that if the buyer is putting 5% down or less, you're entitled to 3%. If they put 10% down or more, it's considered 6% seller concessions. There's a cap on it.
Mhm.
And then if you put down, I think it's 20% or more, you can go up to 9% seller concessions. But we can always run those numbers prior to you making that offer to see what the payments would be and what the rate would be for the buyer. So they would know, okay, I can get this 2-1 buy down and this seller agrees, and we'll get the rate down to 4.5, let's call it. And this is what my
Yep,
payment would look like. I mean, that's that's a sweet scenario for a potential buyer.
it is. It sounds like a really great scenario. I mean, who wouldn't want the idea is that a lot of people out here still think that our interest rates are high. You and I both know that they're pretty normal. This is fair. I mean, there's nothing really wrong with it. But people that have this mentality or they're being fed this garbage from the media and whatever, they're left to believe that, hey, if I can get a 4% rate, because some people are still living in the 4% rates right now, great. If they can get it for 4.5, why not? Right. So this is a great opportunity for them.
Yeah, I
100%.
mean, so that is an option, and the thing is that you don't have to pay for it. You get the seller to
Right.
pay for it. And if you throw in grant money, I mean, you can if
Yeah.
there's down payment assistance money, we could also use that towards paying down the rate. So or paying down the rate and the 2-1 die down. So So there's lots of options for people who don't think that they can buy a house or don't have enough money to buy a house, that there's ways to structure the offer and structure the loan to help them
Mhm.
and assist them in buying a home.
Creative financing.
Yeah,
That's it.
that's what it's. That's exactly what it
Yeah.
is. Creative.
Yeah.